Waveline, presented by Ocean Lending. Thanks for tuning in to another episode of the Waveline. I'm James Edwards, CEO of Ocean Lending. We have Reece over here, one of our top LOs. I brought him along today to kind of talk about some of his situations that he's had in the past. Reece, how you doing today?
Good. How are you, sir?
Doing great. Thanks for coming on board here today to the Waveline.
Yeah.
One of the things I want to talk about in this episode are the experiences that we have with our clients. I want to kind of get that human feel so people know, you know, what happens during the loan process, what kind of things you guys deal with. Do you have any certain situations, maybe like a good situation, and then maybe like a really easy one, and then maybe like a one that had challenges or was kind of tough that you could share with us today?
Oh, yeah, 100%. I mean, every situation's obviously a little bit different each time going into a loan. You want to start with just building trust. And with these specific stories I'm going to bring up, it kind of knuckled down to building trust at the beginning. Mm-hmm. And getting on the same page and helping them to understand that in the end, like, I'm on their team. I want this to go through as much as they do. The easy one, I guess the first one that comes to mind is a borrower that I had out in San Bernardino County. They were actually a referral. His father had referred me as an LO that was a straight shooter and tried to keep things simple and easy through the process.
Why did he refer you? Are you friends with him, or have you done his loan before? Or
well, I got in touch with his father through just normal marketing with Ocean Lending.
Gotcha.
Had a great relationship with him. Did a pretty simple, straightforward loan with his father as well. Mm-hmm. Had a great time with his father.
Gotcha.
And then, we finished that loan. A couple months later, he'd gotten referred.
Referrals are the best. Like they've already been through the experience. They can tell someone else what they experience, and then they could tell them what to expect as well. So that's awesome that you got a referral.
Right, exactly. And so, from the very start, I already had kind of this unearned sort of, maybe not unearned, but this level of trust with this new borrower that I'd gotten on the phone with. And he was trying to feel me out, get a sense for who I was as a person. We ended up starting a loan together. The numbers made sense. They wanted a specific amount of cash to do some home improvements and a couple other things, I'm sure. Mm-hmm. It was just such an easy process because of not only was it a referral, but then their situation was just so clean.
Gotcha.
We got a property inspection waiver, so no appraisal was needed.
Oh, yeah, that helps out a lot.
Right. We went from start to finish. It had to have been like 2.5 weeks. Something like that. Yeah.
And the only reason when you get a PIW or property inspection waiver that it takes so long is because you got these waiting periods that are holding you back. I'm sure we're probably ready to go before that, but you have to lock the loan, wait a day. You got to send out the CD, change of circumstance, sign loan docs. You got to wait for the rescission. Like, besides that, I mean, that's pretty awesome. 2.5 weeks is strong.
Yeah, well, it's funny. Like, this was one of those potentially that could have been, like a 10-day turnaround time. If we didn't have all those waiting periods, it legitimately could have been because their file was clean, the income was perfect, ratios looked good, and it was in and out the door, and, it ended up being a really good loan.
So you got title back really quick too then?
Yeah, title was quick. Everything was quick. They were on board. They helped me get the few conditions that were needed with underwriting, and then we finished the loan. And
a lot of clients, they don't realize that the third party you have to wait on. I mean, we have a lot of it in-house, with underwriting and processing and all that sort of thing. But like when you open up title, it's third party. We have people that we've dealt with before. So, we give them so much business. They give us the service that we need. But appraisals, third party, anytime you're dealing with third party, and a lot of clients, they don't realize, it's just a number, a rate, a payment, and just make it happen overnight. They don't realize how many people are involved. And to get financing done, in 16 to 18 days, that's super strong. And did you get a good referral out of that, or a good review out of that one, I imagine?
Yeah, the review ended up being pretty good, and they even referred me to
another
family member. So
nice.
Yeah.
See, that's what happens when you treat people right. And that's the other thing is, like, when you tell someone you're going to do it and you actually do what you say you're going to do, then the trust even, skyrockets even further. So that's beautiful.
Yeah, exactly. Yeah, in the end, it comes down to, like you said, just doing what you say you're going to do. And I try my best. Obviously, there's certain situations where there's things like these third-party companies that you're working with. It's hard to control everything, but you prep the client at the beginning and make sure you're all on the same page.
Right.
Yeah.
Now, I'm sure the world isn't, just fuzzy bunnies and rainbows. So tell us about a situation that was more challenging and just wasn't as easy, and you had to kind of iron it out a little bit.
Yeah, so there's been plenty of those as well. They're not as quite as clean loans like these 2.5-week closes, but I had another client. They were out in LA, and I was speaking mostly with the wife. They were going to be on the loan together. I got all the documentation and an application in, and it just turned out that because of certain situations, credit scores and stuff like that, we had to remove her from the loan, and it ended up working out kind of in their favor because we were going to have to do an FHA loan. We moved her from the loan. We got a higher credit score now with the husband.
Oh, yeah.
And now we go conventional. So rates are better, payments lower.
Right.
The whole process tends to be a little bit more smooth.
Right.
So that's what the hope was.
And I'm sure she was still entitled. So a lot of people think, that's half my house. I want to be on it. I mean, California's a community property state, but there's other states or even, whatever the situation may be. You don't have to be on the loan. That just means you owe the money, but it's tied to the asset anyways. But we'll just take you off the loan, put you on title, and get you better financing, which is what you want, isn't it? Right? So
yeah, exactly. Well, yeah, and that was the pitch the whole time. So they were on board. The numbers made sense. Then we get into processing and underwriting. Title comes back. There's some issues with title. There was what
was on title?
So there was a couple of liens that had to get paid off from previous debts that they had.
Were they aware of those liens too?
I think they knew that they were on there.
Okay.
I don't know if they necessarily knew the rules that they had to be paid off before you could do a refinance.
Yeah, it's always fun when you get a client and there's like, oh, I don't owe anything else but my mortgage, and they're like, oh yeah, I do have a Solar City lien. I did get those solar panels, or oh yeah, I didn't pay that plumber or whatever. But then you're cleaning it up, so no clouds on title, so that's good.
Yeah.
So you ironed that part of it out, and what happened from there?
Yeah, so that was, a few business days to figure out all of that stuff. The next part of it, there was an occupancy issue. So not to get too specific with the details, but they had to be moved out of their house due to an issue with some soil in their area, in their city. So,
man.
Yeah, it was a huge
these are some
thing.
road bumps right here.
Yeah, but what happens is it doesn't look like they're living in the house for however many months to the underwriter who just cares about the documentation for the most part, so.
And that's the other thing. You are the go-between between the underwriter, who is very black and white, and it needs to be cookie cutter, to, hey, these are human people and this is how it works. So that's something that, clients get when they work with certain loan officers or credit managers, is you conveying the idea, and then the underwriter understands, okay, it's not like they weren't living there. They're not trying to, commit occupancy fraud.
Yeah, exactly. Yeah, and these two borrowers I had were the exact opposite of someone who wants to commit fraud.
Right.
They were the best people I could have worked with, and they made the process so much better for me as someone who had to go to them and say, hey, we are having this challenge. We need to provide documentation to paint this picture for the underwriter who wants to make sense of the situation.
Right.
So my goal through the whole process, regardless of who my client is just to make their life simple, but also find ways to efficiently tackle, these tough situations.
Yeah.
So we tackled that situation as well. Some other situations came up as well through the process where, the borrower, his job, his income changed quite a bit from.
Why? What happened to his income?
So he got a promotion, which is huge.
Yeah.
But with the promotion in his line of work,
what does he do?
He's a longshoreman.
Okay.
Yeah.
And you did this in the last 12 months?
Yep.
Okay, so his income probably skyrocketed tremendously.
Yeah, it was huge. It was a great increase in his income. It made them, much more comfortable with making payments and that sort of thing.
Right.
The issue is he went from like an hourly part-time longshoreman to now a full-time longshoreman who makes mostly overtime.
Oh, yeah.
And so when you're showing the underwriter, this is my income,
Right.
and it's a lot of it is overtime, you have to average it over 2 years.
Right.
And so the numbers, even though, last month maybe you made
Huge.
$10,000 or whatever the number is,
Yeah.
you have to average this income over 2 years. And so, when you average it, it can be a little lower.
Right.
So in the end, it was kind of a waiting time. There was a couple of pay stubs that we needed to get in so we could have a better average of his income for 2 years.
Gotcha.
Because of that recent.
Took the wife off, lost income, keep him on there. But he's got recent bumps on income, so you have to paint this picture to the underwriter, and you have to effectively illustrate why he's qualified.
Yeah.
Right.
Yeah, exactly. And so
not cookie cutter.
No,
a lot of people think it's just it's just easy, but there's a lot to be said for whoever's handling the transaction.
Right, exactly. So, and there were a lot of work went into it, kind of on the back end that maybe you wouldn't necessarily expect. Like, a lot of times the processor or the loan officer or the borrower is getting on the phone and trying to get documentation from wherever it is. In this case, it was we needed a verification of employment to show more specifically the numbers.
Now, was he hired by the union? So he didn't really have an employer, because you see that with electricians a lot, even plumbers, when they're part of the union.
Yep.
And they get a W-2, but they get multiple W-2s from different companies that they work for, but the union is the one that ultimately is sending them out and keeping them busy all the time.
Correct. That's exactly how his situation was.
Right.
So it was kind of convoluted, and we were trying to just make more sense of it.
Right.
In the
right.
end. Yeah.
Piecing all the puzzle together.
Yep. Quite a puzzle it was too, with income and occupancy and all the situations that came up.
So what ended up happening from that point? Is that when you tied it together, or was there still other challenges?
Yeah, that ended up being where we tied it together. And of course, with that amount of time going by and figuring out all these challenges and overcoming them, the market's changing all the time.
Yeah.
So in the end, we got to a point now where we wanted to finalize the loan. Mm-hmm. So now we're discussing, okay, now we're at a point where we can talk about more exact figures. We're gonna knuckle down on rate and cost and payment and everything.
Right.
Let's make sure we're all on board. I got on the phone.
Transparency.
Yeah.
Everything up front. It makes the whole process easier. When you build that trust, clients appreciate it.
Right.
I found too, if you have bad news, which again, the world isn't perfect, but when you hit the borrower straight with the bad news, these are adults. They can handle it. What they don't like is when the unknown is floating around out there and they're trying to wonder, well, what could it possibly be? And then they take years off their life sitting there worrying about what it could be, when really it's not that bad. Hey, you know what? I just can't average your income right now. Let's get another 30 days of pay. So this obviously wasn't your 18-day close, I imagine.
No, yeah, I can't remember exactly how long it took, but it was more like the 6 to 8, somewhere in that range.
And it wasn't us not being able to deliver. It was you just tailoring the loan to make sure it was the right financing that he deserved, is what it sounds like.
And, I'm sure there were moments when behind the scenes they were both thinking, is this really worth it? But in the end, with the amount of benefit that this loan was going to end up providing,
right,
it was 100% worth it. But when you're going through those tough times, the stressors coming up of constantly needing documentation and things like that, just to paint this good picture, to make sure the loan ends up working, the benefits in the end always, or not always, but they usually far outweigh the negative side of it, which is kind of the waiting times and the documentation part of it.
I want to ask you, and I've got a couple of stories that you're sharing some of your borrowers, but I want to ask you, is there any, have you ever gotten a weird appraisal? Something's come back on the appraisal where it's just whoa. Because a lot of times, when you're dealing with a borrower, they don't realize, I got to make all the beds. I got to get the yard done. They get so worried, with the certain borrowers, but it goes off of comparable sales. So the value is not going to change. The appraiser's not going to bring your house in more or less in the matter of the next week or two. If you did all these major upgrades, maybe then, but that's a kitchen remodel, a bathroom, adding a pool or something like that. But have you ever had a situation to where you're well, that's very odd. Like, I haven't seen one of those things before.
Yeah. I've had a couple.
What have you had?
Well, the first one that kind of comes to mind is I had an appraisal come back. This was a few months ago, so it's not very fresh. But basically, it was an unpermitted kitchen that was sitting in a living room or something like that. So he had put in a couple of
In the same structure or in a separate structure?
in the same structure.
Oh, wow.
So, but what it ended up being was,
And why did he put that there? Do you have like in-laws staying there, or why did he need this extra kitchen?
yeah, it was because exactly. So he had family that was
Okay.
coming to stay for him for
Periods of time.
some period of time, and he needed to make their life a little bit easier. So
Right.
I think the situation ended up being something like he added a stove in a place
Yeah.
where it shouldn't have been.
Right.
So that came back all funky on the appraisal. I was like, what is a stove doing in the living room?
And a lot of times, borrowers don't understand, it's like, what does it matter? I have an extra kitchen. But if it's not permitted, it always comes down to health and safety. And I see this a lot with reverse mortgages where they'll build some AUD, accessory unit dwelling. And it's like, I have this extra space to put my mom in the back of the house, or my mom built an extra space to put me in the back of the house or whatever. And I have a kitchen, a stove, and I have, an extra room that I framed in the garage, but you have to cap that stuff off and you have to give it no value whatsoever.
Right.
And you can get the loan done still. Did you get that loan done?
Yeah.
Still?
That one went through.
But you had to jump through extra hoops.
Yeah, there was another hoop. Yeah, we had to get the appraiser back out there. We had to basically reconstruct the kitchen or the living room. So we had to make it not look like a half kitchen anymore. So
Yeah.
I think we moved the stove out of the living room and got it back to looking like a normal living room. The appraiser had to go back out and then redo the report essentially. So we got the new report back.
I had two. These were all way back in the early 2000s, and these were really strange. One was this guy had his toilet right next to his stove, and it was like, are you cooking on that thing? But I was seriously shocked. I was like, oh my God, like you might just be waking up and flipping flapjacks, but who knows what else you're doing.
Yeah.
The other one was I had a certain group of people that they really like to be one with the earth, and they wanted to feel their feet on the soil. So they jackhammered out all the concrete in their house, and they were walking around barefooted on the dirt. And that's just, it was their way of life.
Wow.
They liked it. Needless to say, both those loans didn't go through.
I'm not surprised.
So
it's an expensive remodel.
Yeah, they're kind of strange situations. But for all those borrowers out there, make your house look nice, but don't worry. Get the appraiser out there. It usually takes them a good week, and that's what holds the loan up a little bit too. But you can get the grass cut and the beds made and the laundry picked up. They have to look into every single room. You can't have locks on the doors. They need to know what's going on in every room. I know it's your house, but they're going to want to look, and that's just the way it is.
Yeah. Well, I mean, it just reminds me. There's a current situation where the appraiser, for whatever reason, didn't look into an ADU, which was on the property.
Yeah.
So there's pictures of it on the outside, but not of the inside, and so that needed to be corrected. So we're kind of in the midst of doing something like that right now with one of my current clients.
And it's not to say you can't get it done, but there's going to be some extra hoops, and you're just going to have to get someone that can cooperate with you because you're there to help them get through it. Like you said, you're on their side, and you're there to help guide them. So if you know this stuff up front, then you can tell them, and there's usually some things you can get done up front to avoid a reinspection because appraisers, their time is worth money. They want to charge you $150 to go back out there or whatever they charge you. And then it takes more time to get that report, and then you're going to close a little bit later.
Yep. Yeah, exactly. So, yeah, I mean, it's a big part of the job, of my job in specific, of getting as much information as I can so that we don't run into those issues 2 weeks into the process. And
That's the other thing too, is a lot of times you try to do your due diligence and get all this stuff up front, and you ask for so much documentation, which borrowers never want to provide documentation. I get it. I don't want to do it either. But then sometimes when you submit that documentation, it stirs up additional questions, and then you have to ask for more documentation. It's like, you wanted the pay stubs. Well, now I need an explanation on these pay stubs. Well, why? I already gave you my pay stubs. Well, because the way you get paid, like your previous situation, last year you made 80 grand. This year, it might have been June. The 6 months you've already made 80 grand. So what happened there? Like, we need to know, if there's an increase or decrease in income, or a lot of debt or inquiries,
Yep.
or you're getting turned down, or submitting bank statements and you have NSFs on there. Like, you need to tell your loan officer what's going on. Then he can prepare and structure the file correctly and get it through so it's as painless as possible for you.
Yeah, 100%. And a big part of that is me asking questions. A big part of that too is just from the borrower's perspective, they don't want all these stressors to come up halfway through the loan process. You'd rather at least get it out
of the way up front.
Yeah.
It might be painful. You're going to cry once up front, and then you're going to smile the rest of the way.
Right.
Or you can smile while you tell half the story and then cry the rest of the way while he's asking more questions. It's going to come out eventually.
Yeah.
Bottom line is just give it to me now, and then I can help guide you and draw the roadmap.
Yeah, exactly. And it happens all the time with forbearance. It happens with this time of year when we're getting pay stubs that don't reflect the year to date from 2021.
Right.
So we're asking for pay stubs up front. If you're an hourly employee,
right,
we can't necessarily see how much you got paid last year until the new W-2 comes out. So
right.
There's all of these different kind of things that we're having to look out for.
You brought up forbearance. That's something else I want to talk about. I want to talk about, COVID's happened. It's a real thing. It's affected, millions of Americans. It's worldwide been a pandemic, and it's been just a serious trying time that we had to get through. A lot of people couldn't make payments. Their only option, because they weren't going to work, we were shut down. So they couldn't make payments, and the option for them out there was forbearance. And it's as easy as literally hitting one on a phone, calling your servicer, and, hey, are you having a tough time? Hit one, and you can be placed in forbearance. And then you don't have to make payments for whatever period of time that they agree to, which you don't even know what you're agreeing to most of the time because you just hit one. That's all you know.
Exactly.
But what borrowers don't realize is once you hit one, yes, you're in forbearance, and now you don't have to make payments, which is great. But let's just say it's a 6-month forbearance. At the end of that 6 months, they want all 6 of those payments for you to get back into the game. And if you're calling around while you're in forbearance, you're not going to be able to obtain typical financing, at least agency financing, Fannie Mae, Freddie Mac, Ginnie Mae, unless the government ones are 12 months of payments on time, or conventional is only 3, which is good, but your credit score has to stay up, and you're still going to have to show that you came up with those 3 months all at once, that you missed, your 6 months or your 3 months or whatever, and then you have to make your 3 payments on time after that. So what I'm seeing is, and go ahead and weigh in here if there's anything that you see to add to it, but now what I'm starting to see is a lot of these servicers, they're saying, oh, you don't have the money, because by and large, they don't have the money to get caught up, is, okay, well, how about a loan mod? And back in 2008, 2009, 2010, there was a lot of loan modifications when the mortgage meltdown happened. And, there's a lot of people that went through it already. But what happens on those is you're not going to be able to get typical financing until you make 12 payments on time. So a lot of people will call around and go, I got great credit. I make a lot of money. Well, you're in forbearance, you're not making payments. Well, yeah, because they didn't say I had to. Well, to get additional financing, you're going to have to show the ability to repay a debt, and that's what it comes down to. Have you had a bunch of those? I'm sure that's been like the thing. Obviously, you can't get away from it.
Yeah, it's got to be 90% of the people that are looking for loans, just because of it was a great option for people that were struggling month to month during the pandemic, and they didn't have to make their mortgage payment anymore. Most of them, in the end, didn't seem like they knew exactly the details of what that was going to look like. And you're right, yeah, a lot of times they had to make these big lump sum of payments so that they could get back to current. and now they're trying to refinance or lower their rate or take some cash out.
Right.
And there are these seasoning times, and so it's
Right.
it's one of the questions I've added that you've had to add, because the last thing you want is to get a loan started and get it all set up, and then you realize they were in forbearance and you have to wait 12 months.
Which, kind of going back to your previous point, is like you try to ask for everything up front. If they don't tell you that they were in forbearance or in loan mod, you're going to have to come back to them and ask, okay, now I need the forbearance agreement or the loan mod agreement, and now I'm going to have to get payments from you, proof of those payments that you made, because they might not be reflected on a credit report. So you're going to have to go to your bank statements. Now I need your bank statements. And I know you don't want to provide documentation, but these are the things that you're going to have to provide if you've done these things. So I'm not saying there aren't ways around these sort of things and different types of financing. So it's always best to talk to your loan officer to find out what exactly, do you need from me? But if you're transparent, honest, open, and you guys work as a team, and these are easy things to overcome. It's literally, nowadays it's so easy to log into your bank account, download a couple statements, and either email or upload to our system, and you have it within seconds.
Yeah, and not only are there different types of financing to get through those forbearance challenges, but there's other ways too to increase your credit score and make sure now I don't have to go the FHA route. I can go the conventional route, which the seasonings on a conventional loan out of a forbearance are a little less strenuous. So I've got a couple of people I'm working with now that are in very similar situations. It's funny you bring it up.
Yeah.
I'm in the middle of one currently, trying to get him qualified for a conventional loan. So we're doing a rapid rescore to get his credit score up quickly. So, yeah.
Now, what about these guys that, they've been off work? They still got great credit. They were able to make their payments on time. They want to take cash out. We have a program, the My Community program, that it's not a stated program, but essentially it kind of works the same way, where you don't have to show your income to get qualified for the loan. Have you done any of those?
Yeah, I've done several. The process is very similar.
And simple too.
Yeah, it's very simple.
Right.
The documentation needed is not quite as much. Right. You need a couple of things up front. You need to structure a solid application.
Right.
And then you submit it and you go through the normal processing and underwriting process. But it's it's a really good program for people out there. Yeah.
Right. And I know a lot of people want the advertised rate, most of the time, but these are actually good rates on these loans. Call to inquire, because it depends on your loan to value and your credit score and different things in your situation, but they're actually good rates. It's not like, okay, now I can see why you're offering that, but these are good loans that, like, almost anyone with a great credit score and equity qualify for. And if you have a need for cash, which everyone has a need for cash, we all live life, then you would qualify.
Yeah, 100%. Yeah, we're really looking at credit score and equity to figure out, one, does this program make sense for you? And if it does, then what are the terms?
Right.
And you're right. Yeah, people are still used to hearing those interest rates in the twos from 2020, which were historic lows. But interest rates that are a little bit higher than that aren't necessarily bad interest rates.
Not at all.
Yeah, in these community programs, we're giving people great interest rates and access to a ton of cash. So.
Especially like right now, I don't think that there's ever been a time in American history where the American consumer debt has been as high as it is now, but also equity has never been as high as it is right now. So we're in a much different situation than what the mortgage meltdown was, where there was these stated income loans at 100% financing and no one had any skin in the game. So everyone was willing to let go of their house, and then that's when values started to plummet. Right now, people have a lot of equity, and in Orange County, I think just yesterday there was 978 houses on the market in all of Orange County.
Yeah. And
it's like, holy cow, like supply and demand, all these people have equity too. Values are still going up right now. And I know rates have started ticking up a little bit, but it's crazy that there's no inventory out there. And that's not just Orange County and Southern California. I got people moving to Texas, Arizona, Idaho, and the builders are going crazy. Inflation's for real right now, and the cost of lumber is going up, and people are still lining up down the street to get into a new home in these new developments, and it's just bonkers.
Yeah. No, it really is. But when, like you said, when the debt's high and the equity's high, that creates quite an incentive in the end for people to access that equity to kind of consolidate the debt and put yourself just in a better situation month to month.
And especially, going back to COVID, a lot of people may have relied on their credit cards to get through that because, maybe they're in the entertainment industry or the service industry or whatever, and they had to get shut down. Well, there was a lot of things that the government was doing to help them, giving them some of these checks, but maybe they had to, keep living their lifestyle. So they put it on the Visa or MasterCard, and now, they've got these interest rates, even though they tell you it's 0%, which, it is 0%, but then you notice, oh, I keep making this minimum payment and my balance is going up. So what's happening here? And it's, it was within a certain time period, or, it was only on certain purchases that I made that qualified for it or whatever. And no matter what, that payment's not a tax write-off like your mortgage interest deduction is. So,
right.
There's a billion different reasons why you can convert that debt into something that's going to be less of a monthly outgo and more of a tax savings as well.
Yeah, there's plenty of benefits, and sometimes they aren't as obvious as, oh, look, your monthly payment's going down or your interest rate's going down. There's, like you said, the tax savings is a huge benefit.
Right.
Not a lot of people necessarily think of that as a benefit, but that's kind of where you're educating the borrower.
Didn't you just have a hard money loan where, the rate was high, double digits, obviously, and hard money? You got bad credit, you got bad income, like you just don't really qualify. You have equity in a house, but if you think about it, like the closing costs are probably going to be higher on hard money types of financing too. It's hard money, but somebody that's self-employed that doesn't pay taxes, he's making $200,000 a year, but then he figures out ways to net zero on his income, so he pays no income taxes. He might have paid $100,000 in taxes, or maybe he pays $20,000 in closing costs. Well, yeah, it's an ugly loan, but who saved money there? That's $80,000 less than what he would have paid if he would have paid the taxes, plus had some closing costs anyways.
Yeah, yeah. No, it's a really good way to phrase that situation, because the kind of the sticker shock of seeing those higher rates in the double digits can be frightening or surprising or immediately shut down the conversation. But luckily I had a great relationship with this gentleman, and I was just looking for options for him. Yeah. So I found
it's all temporary too.
Yeah.
These aren't loans that you stay in for, your life or anything. It's a Band-Aid literally. And then you get into a Mind Community program, or at that time you qualify for the 12 months. It gets you out of a bind is what it really does. It's not for everybody by any means, but there's just reasons why you take different types of financing, and sometimes some people fall into those categories.
Yeah, and his situation is what it is, and we found ways to get him this loan, get him some cash to do the debt consolidation and all that
Still
stuff.
Saving money.
Yeah, 100% saving money, and in a few months we've got a very specific plan that we're currently putting together to get him out of that higher interest loan. And I think we probably are going to use that My Community program. So, drop the rate quite a bit, drop his monthly payment, put him back into a situation where he's more comfortable with.
Gotcha. Well, it's been fun having you out here today, Reece. Thanks for stopping by. Is there anything else that you could think of that you want to add for the listeners out there and the viewers?
Not necessarily. I think we covered plenty of points. In the end, a lot of times with me and with the other loan officers at this company, in the end, we're really just on your team as a borrower. We want to get this loan in and out the door just the same way that the borrower does.
Right.
And so it's important for us to know or to help the borrower understand that we want to get this done. Also, we want to be on the same team. We're there to help. We're there to facilitate. So figuring out ways to create that level of trust to get the borrower on board is really huge for me and for, of course, all the other loan officers out there.
Right. We're not loan robots. We're human beings, and we care about you.
Right.
And when we're dealing with people, that's exactly what we're thinking is, how can I help you? If you help people, you always get everything that you always want.
Yeah, and that's exactly why I got into the industry in the first place. I had this desire or this need, this want to help. And we're finding ways to do that with everyone that we talk to.
Right. Well, thanks again for coming out, Reece. It's been fun, and thanks for coming for another episode of The Waveline. For more information, please reach out to us at www.oceanlending.com.